In the name of Allah, the most beneficent, the most merciful. I am Muhammad Asif Chaudhary, and today I will discuss the topic corporate tax avoidance and firm performance. This study is done by the authors Malak Irfan and Munir in 2025. This is a very novel, very comprehensive and very beautiful study which is published in the Journal of Cognitive Business and Management. I am Muhammad Asif Chaudhary and I will elaborate this study because the beauty of this study is that it is the comparison between SAARC banking sector, which is the data taken by the author from India, Pakistan, Sri Lanka and Bangladesh banking sector. So he made a comparison between these sectors, what the governance is doing, what the corporate tax avoidance is doing, and what the firm performance, the results of these studies. So novelty is that the author comparison the SAARC country regarding this study. What is the background of the study? For background of the studies, as taxation is a crucial for economic regulations and development. Everybody you know the history of taxation. Taxation is an important part of any country, any organization and any persons who is earning money and making a development. So economic regulations and development, taxation has a crucial part. And the SAARC countries face a low tax to GDP ratio and governance challenges. Because in SAARC, all are the developing countries, and in developing countries, as you know, up to 1947, they are under the rule of British, and there is not developed the corporate governance and other ethics in business, etc. Most of the time, the rulers and invaders from outside the subcontinent comes and looted all the money. So they have not improved their any economic situations, which is discussed as therefore the tax to GDP ratio is very low in these countries, and there are governance challenges because in the developed country the governance is discussing from centuries and doing the corporate governance rules from centuries, but in our subcontinent we have a very short life. But now we should overcome these problems, and the corporate tax avoidance is seen as a method of enhancing after tax income, because when the organization avoid the taxes, the basic theme of the avoidance is that they increase the shareholder value of their shareholders and the wealth of their owners. So the important thing that corporate tax avoidance is the enhance of after tax income. If we discuss about the research gap, as the limited empirical evidence for SAARC emerging economies, most of the studies of the firm performance and tax avoidance are from the developed countries, from American and British countries, European countries. But this is the good study. There was a gap, and second one thing that is made the most beautiful of this study is the comparison of different countries and unclear moderating role of ownership, concentration and board independence. We will check the moderation of the board independence and the ownership structure, because in our countries the board independence is it is a real, or it is only dummy, or it is only just to fill the vacancy, or the independent director or the executive director play its role properly or not. Then we will observe that what the board independence affect on the tax avoidance, on the corporate governance, and what are their roles. It will be discussed in this study. And the financial sector in developing country are underexplored. Yes, most of the time we do studies on the non-financial sector. Why? Because non-financial sector is basically producing sector, and financial sector is mostly the services sector. Therefore, most of the time we focus on our research to the non-financial sectors, because it increasing the GDP and giving a more employment to the people. We mostly ignore in research the financial sector. In this study, they discuss the financial sector. Now the objectives of the study, what are the objective of study? The objective of study is to examine the relationship between tax avoidance and firm performance. Is there any relationship exist between the firms regarding the tax avoidance and financial performance? If the companies avoid taxes, it can perform better, or if the companies not avoid taxes and it can perform better, what is the relationship between them? It is a curiosity, and this idea should be observed. This is the objective of study. And second one is investigating moderating role of ownership concentration. What the ownership do for these studies is ownership affect, concentrate, moderate this relation of tax avoidance and firm performance or not. And third one is examine the moderating effect of board independence. Is board independence moderate the relationship of corporate tax avoidance and firm performance? We will discuss all the things and compare the result across Pakistan, India, Bangladesh and Sri Lanka. This is the very nice novelty of this research, which attracts me more to present this research against you, and you can learn a lot like me. As when I study this, I read this article, I gain a lot. I think I decided that I should convey all these things to you so that you can also learn about it. Now the sample and methodology which is used for this research. The sample for this research is 91 banks from Pakistan, India, Bangladesh and Sri Lanka for the period 2010 to 2021. For 12-year period selected against 19 banks from these 4 countries, and data from annual reports. Because the annual reports are all banks are available, the data is collected from that reports. Method pooled OLS, ordinary least scare and fixed effect and random effects are checked by the statistical tools. Then the variables, variable is the return of asset, as we measures the firm performance from return of assets, which assets are invested and what is the return on these invested assets, return on equity or earning per share. These things measures the firm performance. And effective tax rate measure the tax avoidance. What is the capacity of tax avoidance? If the effective tax rate is more, it means the firm is paying more taxes, so tax avoidance is low. But if the ETR is low, it means the firm is paying less taxes and the tax avoidance is high. And then ownership concentration and board independence are the variables of this study. Now how we measure the measurement of the variables is that corporate tax avoidance is effective tax rate, as I elaborate that if the firms pay more taxes, then effective tax rate will be high and tax avoidance will be low. But if firms pay low taxes, effective tax rate will be low and tax avoidance will be high. Like that, firm performance will be measured from return of assets, what assets are employed and what they are returning back, return on equity, how much equity is doing a business for capital is used for earning the profit, and on what capital which profit is earning, and the earning per share is the measurement of the firm performance. Ownership concentration is measured by five top shareholders, and the five top shareholders having a more ownership, and then board size is independent director divided by the total board. This is the measurement of board independence. What are the key findings in Pakistan? Now we talk about the findings of this study. Tax avoidance does not significantly improve the firm performance. In Pakistan, tax avoidance did not significantly improve the firm performance. It means there did not exist any relationship between tax avoidance and firm performance. Why? Because most of the population or most of the economy of the Pakistan is undocumented, and there is a very low tax to GDP rate or ratio, which is almost 9 to 10%, and most of the economy is not paying proper taxes through documentation. Therefore, I think it did not clearly mention what is the effect on that things, and they are not calculated, can be calculated as a whole. It's my idea, but the result shows that there is no any relation regarding this study. And ownership concentration does not moderate the relationship, and if the relationship of tax avoidance to firm performance did not moderated by ownership concentration did not have any effect. And third one is board independence negatively moderate on the under of return on equity. When we use the proxy firm performance return on equity, then board independence negatively moderate. It's a very astonishing result that because there is no cost of board independence and independent directors, they should improve the firm performance, but it is very astonishing result that there is a negative relationship. Mean it should be observable, or the most research should be required. Are the board independence is properly independent? They are only the proxy, or they are doing their fair job? It should be recovered like in economy like in Pakistan. So the findings of Pakistan shows that there is no significant result between tax avoidance and firm performance, and no moderation of ownership concentration, but board independence is negatively moderate return on equity. The key finding of India, if we check the result of India, then tax avoidance improve the return on asset and return on equity. Mean tax avoidance improving the firm performance. Mean how much tax avoidance will be high, the return on assets and return on equity will be high. It means the firms who are avoiding taxes, they are performing better. But the ownership concentration positively moderate the relationship, and ownership concentration also moderate the relationship. Mean ownership take up much interest for avoiding the taxes, so it is also moderate, and board independence negatively moderate the relationship. But same as like Pakistan, in India the board independence negatively moderate this relation. So the board independence, if actively doing a work, or they are checking that tax avoidance should be avoided by the organization or not, this is the question in this research. So the requirement of board independence against the performance and mediating moderating role of tax avoidance family ownership is required in research. So I will do inshallah on this topic, I will do the research. I get idea from this article. And what is the finding of Bangladesh? In finding like Pakistan, no significant link between tax avoidance and performance. In Bangladesh, ownership concentration does not moderate, same result as Pakistan, and board independence negatively moderate under return of equity against same with Pakistan because it is a part of us, and Bangladesh is our brother, and same results are shown in the research also. And key findings of Sri Lanka, Pakistan and Bangladesh, there are same result in Sri Lanka, no significant impact of tax avoidance on performance. Ownership concentration does not moderate the relationship, and board independence show no significant moderating effect. But in Pakistan and Bangladesh, it shows a negative impact, but in Sri Lanka, there is no moderating of board independence also. So it shows that in Sri Lanka, there is no proper positive effect. So if we saw the comparative summary of this result, what are the results? That Indian stands out, tax avoidance enhanced performance. Only in India, tax avoidance enhanced the performance, but in other countries it did not enhance the performance. So I think when there is not active enforcement authorities, and they did not penalize, or they did not take the media did not perform its good job, that tax evader are doing a good job, and therefore they perform better. But as per my result, my thinking, where the tax avoidance when the tax avoidance is high, performance should be low, and when tax avoidance is low, performance should be high. And other SAARC countries show no significant effect on this, and the governance structure influence the outcome different across the country, because the governance structure is different, therefore it shows the different result across the country. And what the policy implication can be done? For the policy implication, strengthen the transparency in tax reporting, because when the tax reporting is properly, then the result will be positive. Therefore it is necessary that tax reporting should be strengthened through audit, through vigilance, through enforcement authorities, and improve the governance standard in banks. The governance has not a lot of impact on the performance. So it means that like board independence and other governance standards should be improved in banks, and developed qualification requirement for independent director, or the independent director have some qualities so that they can become a independent director. It should not be dummy, and it should not be only proxy, but it should be a proper that who can do his work properly. And tailors tax policy reforms to country specific governance restructure. For future research and directions, I will suggest, as per their study, they suggested that they include the additional moderating variable can be included, like the moderation of board independence, and the moderation of ownership structure is added in this. The family control, or the tax avoidance, or the social performance, corporate social responsibility, other things can be included in for future research, and expand data to non-banking sector, because it is only the banking sector. For non-banking and non-financial sector are more important, because they create a more employment, and more taxes are given by the that sector, so they can be added. And examines the post 2021 regulatory reforms. Now I will inshallah check it, and use the advanced econometrics techniques, because the advanced econometrics techniques are not used in this study, but in next study which I will do inshallah, I will use the GMM and SEM for the my research. This give me an idea. Therefore this is a good paper who gives the idea of future research. Thank you very much. As you are not available in front of me, so that you cannot do a question and answer, but you can comment on comment box for your any queries, or you can call me on my given number. and you can ask any question related to tax avoidance and research. And further, if you get a knowledge from my discussion, then like, share and subscribe it, so that the other people who can view the video or listen the video, they can also get a knowledge like you. Thank you very much. Have a nice day.